Welcome back to Crypto Mates AI. Gary here with an update for you. Do me a favor, friends. Smash that like button, hit subscribe, and comment down below. It really does help with the algorithm. Now let's get into this. We're sitting at $2.83, trading within a range of 282 to 288. We're pretty much running flat on the 24-hour. We're holding that 280 mark pretty well. We'll just keep an eye on it and see where we go from here. And when I talk about a financial crisis or a liquidity crisis, I do believe it will start in Japan. And this is what will usher in the financial reset, the flip of the switch, whatever you want to call it. Let's hear what this guy has to say. Let's talk about the UK.
30-year government bond yield. And what is that? It's the long-term interest rate the government has to face. The higher that is, the more it's having to pay for interest. Us, basically. And that is the highest level now that it's been since 1998. So you're talking about a generational high in the 30-year government bond yield. And of course, there's another question. Is the UK alone in facing high bond yields right now? Well, yes and no. Okay, so this is the dark lines here, and this kind of this area is showing you the rest of the G7. So Japan up by 0.92%. So actually, since the start of this year, which is kind of the period when everyone is starting to fret about what's going on, the UK doesn't look all that bad versus everyone else. It's just that the level is considerably higher to start with. Now, that was yields. Another thing that the Chancellor will always get nervous about is if the pound starts falling. And what happened to the pound just now? Look at this. It went down really sharply against the US dollar. So you put those two things together, and that is the kind of combination, the toxic cocktail that a lot of finance ministers would get quite nervous about, raising the question, what is behind this and what can she do about it? Well, part of it is about inflation. This is showing you the UK's inflation rate, okay? And it's just the rate at which prices are changing each year. Generally speaking, the higher inflation is, the more people think interest rates are going to go up in the future, and so they're going to assume that you're going to have higher borrowing costs going off into the future. And the UK's inflation rate is not just above the Bank of England's 2% target, but look at this. So we're doing the same exercise that we did with those G7 economies when it comes to gilt yields. This is UK versus everyone else when it comes to inflation. And look, we are way out of whack with everyone else. And so if you're looking at that and you're thinking, well, it looks like inflation's a bit kind of, stuck in the UK, maybe you're going to charge a higher interest rate for the UK. So inflation is potentially part of it, but as is what's going on with the public finances. And what's going on with the public finances is, well, this chart tells you a pretty stark story, okay?
Unfortunately, this is a global crisis. It's not just in one of the G7 or a couple. It's pretty much in all of the G7, pretty much all of the world. If you think about it, I believe it's right around like 330 trillion in total debt globally. US holds 37 trillion of it. That's pretty damn substantial if you ask me. In my opinion, we're going to see probably a black swan event happen no matter what. And that's what will usher in the fix that they already have set up in place, which will be digital currency and blockchain technology. The Federal Reserve will host a payments innovation conference on October 21st, covering DeFi, stablecoins, and AI and tokenization. I'm telling you, they're all getting ready for the November 22nd ISO 222 standards implementations when it takes full effect. Unfortunately for the critics, they don't have much ground left to stand on. Ripple isn't just a payments company anymore, and they're right in the middle of global tokenized finance. Billions are already flowing across XRPL. XRP ETFs are lining up for what could be some serious inflows. And yes, the banks are all watching all of this a lot more closely than most people realize. And the serious capital hasn't even entered the chat yet. The next phase will be one for the books, my friends. Weebus International signed strategic partnership with Air China, unlocking access to over 60 million members and introducing future XRP payment solutions for 60 million plus Phoenix Mile members. Enhanced user experience, instant transactions, tokenized rewards. Everything's going digital. All of it. Eventually, everything will be tokenized. And the market's dumping, and I'm buying more XRP because of this. Hong Kong scripting for a 3.3 trillion future of tokenized ETFs, CBDCs, and stablecoins, and XRP is at the center of all of it. Ignore the noise, front run the system. This XRP dip is the last lifeline. Don't cry when it's at $10 and say I didn't warn you. The Bitcoin maxis called XRP a scam, but public companies are betting billions. Billions are already being allocated into XRP for treasury, yield, payments, and reserves. They're front running retail before this thing explodes. Are you seeing it yet? SBI Holdings, 10 billion allocation. Longtime Ripple partner. Trident Digital Tech Holdings, up to 500 million treasury and staking. Weebus International, up to 300 million treasury management. Vivo Power International, 100 to 200 million yield via Flare Doppler recent 30 million deployment. Wellgistics Health, 50 million payments and reserves. Nature's Miracle Holding, up to 20 million long-term reserve. Hyperscale Data, 10 million on the balance sheet. Worksport Limited, up to 5 million e-commerce integration. The BC Bud Company, 250K diversified treasury. Flora Growth Corp, not specified, but it's for treasury holdings. Quantum Biopharma, not specified, added to the balance sheet. Everything Blockchain, 10 million yield via Flare. Gumi Japan, 17 million treasury allocation. And Digital Communications, 225K treasury plan. They're all getting ready. You know, I gotta say it, my friends, the institutions are here. And HBAR just solved one of the biggest hurdles to enterprise DLT adoption. No corporation wants to manage a crypto wallet to pay for transaction fees. And now with TransAct by Hashgraph Group, they won't have to. All fees on Hedera can now be invoiced via a monthly bill, no different from any other traditional business expense. This makes adoption of Hedera's business use cases exponentially more streamlined as corporations can use the network without worry of HBAR tokens. And while on the front end it operates seamlessly, just like Web2, TradFi payments, we can be sure that HBAR is still fueling the network behind the scenes. True enterprise adoption of DLT should feel invisible, and that's exactly what TransAct is providing on Hedera. TransAct enables institutions to execute transactions on a distributed ledger technology DLT network of Hedera without the need to hold HBAR. Crypto-related gas fees for all transactions processed on Hedera are invoiced monthly in USD. Project Acacia marks one of the Reserve Banks of Australia's largest CBDC project. Multiple government entities, private sector finance, private DLT with R3 Corda, LT solutions with Canvas, and public DLTs with HBAR and RBNT. The testing will involve 19 pilot use cases involving real money and even real-world asset across multiple markets. These asset classes involve fixed income, private markets, trade receivables, and carbon markets. As we mentioned before, there's quite an interesting case for both these public L1s in here. On Red Belly's end, they're actually included in Australian government's National Blockchain Roadmap. That alone speaks volume on how the Australian government as a whole sees Red Belly. Things are a little more nuanced on Hedera's end, and this is because of the fact that Hedera had actually collaborated with the Reserve Bank of Australia and their partner DFC-RC on CBDC frameworks just a year back. On top of this, we got to factor in Hedera Council members Australian Payments Plus. As the merger of three Australians' top payment providers, they now cover over 70% of Australians' retail payments. On top of this, they're currently testing Hedera's private permission DLT HBAR. Given the importance of Australian Payments Plus and their ties to Hedera, it's no surprise there. This is one of the most ambitious CBDC projects yet, spanning across multiple asset classes, running across multiple DLTs, and involving multiple key Australian financial players. And of course, government backing is looking as strong as it can be here. The scope of Project Acacia is to test how different forms of digital money can harmonize and work with Australia's developing tokenized asset markets. In other words, the intersection of money and RWAs. And that's why I've always said a multi-token, multi-chain system. And everyone's been yelling about RWAs for the past 2 years now. Treasury this, money market that. But Brazil's skipping the hype and gone straight to executing. And they're doing it on XDC. Let's talk facts. A while back, Brazil's federal IT infrastructure giant XRPL partnered with XDC. This was to assist with rolling out KYC and KYB and AML and biometric verification using blockchain authenticacy. XRPL processes everything from tax systems to identity databases to financial background checks. They're used by the Brazilian Ministry of Finance, Federal Police, Treasury, and more. Needless to say, that's a lot of trust to be putting into XDC's blockchain capabilities. That alone puts XDC in a different category than most chains. It's actual government-grade operations taking place on-chain. But that was just the opening play. Now Vert Capital, one of Brazil's most active securitization firms, is bringing $1 billion in real-world assets onto XDC. This goes beyond DeFi or tokenized treasuries we've already seen. We're talking about tokenized corporate debt, agribusiness credit, commercial receivables, and more real-world trade instruments around trade finance. This is industry-specific tailored tokenization, perfectly to fit XDC's trade finance-focused chain. Why XDC? ISO 222 aligned, MLETR compliant, 2-second finality, near zero fees, permission subnet support, trade finance optimized. Most tokenization firms are still focused on tokenizing U.S. treasuries. XDC has already spread its arms globally and is attracting liquidity around the world. And the biggest key separating them apart? They're not just playing in the broad narrative of tokenized financial markets. They've actively been tokenizing trade finance, and this partnership just plays into that even more. This is proof of utility in industry-specific tokenization. I'm telling you, my friends, we are moving into the utility phase and out of the speculation phase. Those coins that are speculative in nature will most likely still have those huge crashes as we've seen before in past cycles. Well, that's what I have for you folks. Until next time, stay savvy, stay stacking, and I'll catch you in the next one. If you enjoyed this, smash that like button, hit subscribe, and comment down below. And if you want more crypto deep dives, check out our videos right here on Crypto Meets AI. Thank you for watching. Remember to always do your own research. This is not financial advice.